Sam, I see you are with me already. And there is Mr. Pepe. Frank, thank you for joining us.
Hello, thank you for having me.
Brilliant. Thanks, everyone. Thanks for joining us back after the break. I see we have absolutely all of our participants live and with us this evening in South African time. We are really excited about this next session. We call it kind of war stories, 1 year post fundraise, more or less. We are talking to Sam Hutchinson, who's the co-founder of Sendmarc, a very exciting local tech startup that's raised some funds in the recent period. And we're also talking to Frank Pepe, who's the vice president and global controller for a multinational organization based out in the US called Impact. Gentlemen, great to have both of you here with us tonight, and excited about this session and to see what we can learn from it.
Great, thank you for having us, man. Good to be here. I'm always impressed with what you do, Louw, so thank you.
Oh, Sam, no, that's very kind of you, man. Yeah, they are so grateful for the incredible people we get to meet and the fun things we get to do all the time, right? Cool. Gosh, Jen, so maybe just for a little bit of context for this panel, would you mind just sharing just the kind of 30-second, 1 minute snippet about your organization? Like, what do you guys do? Where are you based? What are you doing? Frank, can I ask you to lead us on that?
Yeah, of course. Impact.com is the world's leading partnership management platform. And what that means is we can manage partnership at scale, including traditional rewards affiliates, influencers, commerce content publishers, B2B, and more. We have a homegrown software that allows our customers to engage with partners globally to run campaigns from trusted, authentic partners, driving revenue, marketing, and clicks to their organizations and ultimately helping them grow their business. Sure. We believe we're creating a new channel to kind of drive revenue. From a size perspective, we're just under 1,000 employees. We have 13 legal entities, and we're geographically spread all over the world. And as you know, we have a center of excellence here in Cape Town, South Africa, with over 400 employees in DevOps, finance, CS, sales, and HR.
Jeepers. Frank, thanks for that. How many countries do you have clients in?
Right now, we have clients in probably 30 countries, and we have partners and publishers in over 145 countries.
Jeepers. Frank, thanks for being here with us. You represent let's call it mid-size organizations on the call. Sam, over to you.
Yeah, I feel like I now represent micro organizations. Yeah. So I'm a 2-year cybersecurity startup. We solve a very important problem in a very boring sector, which is email. So there's a fundamental problem in email where cyber criminals can send an email from just about any organization in the world. And that problem is called spoofing and impersonation. And we globally stop that. So Frank, I see well done to you guys. You've employed the technology that we promote. You've got a few mistakes, so one day I'll help you.
Yeah, hey, Sam, we have to meet up after this.
Yeah, but that's what we do. We're globally making the internet a safer place, and we're solving a major problem with email. Yeah, we're 2 years in the run, been good fun so far.
Thanks, Sam. Thanks for keeping us all safe, and great to see business happen here on the platform tonight. That's really cool. Gentlemen, just as a kind of a starter question I want to pose to both of you. So both of your organizations have kind of chosen to raise equity capital, sell some shares to raise some money to grow the organizations faster. I'd love to hear your arguments for why that model, as opposed to kind of like growing organically from funds from clients as one goes, as so many founders do. Maybe Sam, on your side. Yeah, please.
Yeah, so I think the best time to start a business is sort of in your late 30s, early 40s. That's when you have the most skill and the most experience. The problem is you often have a family, and to put that all on risk is just close to impossible, right? So now to solve that problem, you got to raise VC, but it's not just about employing yourself. If you want to get some of the best talent in the world, you got to be able to pay those people as well, right? And if you want to be the best company in the world, you need great people, and it's almost impossible to bootstrap that. I don't know how people think that they can build global organizations with some sort of sense of funding. I mean, it's close to impossible to bootstrap that stuff. And if you look at all of I would say most of the greatest tech companies in the world, they've all gone through some sort of phase of funding. That's what I believe. I could be proved wrong, but I don't see it happening other ways personally. Frank, I don't know, what do you think?
Yeah, I mean, when I think about it, when you have what you believe as a company to be some type of market leading product, and you really need to just spread your wings and get the word out there, kind of a more geographic spread, more AEs, and you're seeing both the adoption from some of the logos that you could see on Impact's website, and you're seeing the usage of the platform and how those customers are using it. You kind of hit that stride where you're like, if we can get some of these major players around the globe and some of these major logos to use our platform as a startup, imagine if we had the ability to expand our outreach faster through different countries, through AEs, through technology advancement. So I think it's not that you necessarily need to do it, but I think if you have what you believe to be a market-leading product or a product that'll solve a problem in the world, it may make sense to kind of reach in and expand rapidly with some of that additional capital.
Love it. Love it. Thanks for that perspective, guys. So Sam, we spoke last year on this very same platform on the War Stories panel at FundraiseCon, more or less the same time of the year, and you guys had just closed your round. What has been happening at the company since? Tell us a story about the last year.
It's been an amazing year for us. I mean, I think about a year ago, we had about 60 customers. We now have about 500.
Oh.
We 7 times growth in the last 12 months.
Gee.
We hit all of our targets and are exceeding all of those. So,
Sure.
I mean, we have customers all over the world, NASDAQ listed entities, customers in South America. We service many, many companies on the JSE. It's been going good. There is no doubt there is still pain. But I think the pain is a bit different. We have aspirational pain. Like at Sendmarc, we want to be a world leader, and not achieving that potential is really what keeps me up at night. I mean, it drives me crazy. What can we do more? Is always the question we're asking.
Yeah. So I think in a small mid-sized organization, and even in a larger one, probably when it's growing fast and raising capital to scale, there will probably always be pain of some sort. I have yet to meet the business owners in a company that feel that everything is smooth sailing and they're changing the world and rapidly scaling up. So yeah, I think it's part of the ball game, just kind of leaning into that, right?
Yeah, one of our problems is we have over 3,000 customers experiencing a POC with us. I mean, if we can just meet those at our close ratios, we'll triple this business. It's just grabbing the opportunity in front of you. I mean, it's hard work, eh? Yeah.
Frank, if any of the investors on this call invest in you guys after this talk, we're looking for a commission on it. This is just too good to be true. Well done, man.
Thanks. And by the way, I've only been here 14 months, so I think I was the benefit of some of the prior rounds of fundraising. And I was kind of one of the newer people that came in and had experienced growth in the startup space before. So I can't take any credit up until this point. I got on a fast-moving bullet train and have kept it going.
Sure. So Frank would love to speak about that bullet train, because I believe if Crunchbase is correct, in 2008 you guys raised $400,000 and your last round was $150 million. So quite a sizable jump in not all that many years. It's really unbelievable. Kind of would love to hear just kind of like what has made that possible, like from your perspective, even if it's just the last $150 million round that you speak to, like what the hell makes it possible to raise that kind of funding?
Yeah, I mean, I would think one, kind of the technology that we have and being a market leader in the space that we're in, as well as driving people to understand our space and having reasonable competitors kind of pushing us and showing the adoption is helpful. So we spend a lot of time kind of educating the market, educating investors kind of about the space that we're in. And sometimes when you're creating a business that's meant to solve a problem, a lot of it is just getting people to understand what problem you're solving and why that's kind of a benefit going forward. Sure. I think two, historically illustrating what you've done with existing capital by looking at some of your KPIs, whether it be ARR growth or kind of cash burn, or how you're effectively utilizing, not in so much detail, but how you're effectively utilizing the existing capital to grow the business. Sure. I think investors look at that and they kind of can do exactly what you did. Look at Crunchbase. They can kind of see when we had the capital raises. They can, see some of the growth that comes after those capital raises and some of the strategic investments that we've made. And they can kind of think into the future that, well, this additional money can kind of be put to the same use to continue to grow X, Y, and Z. I think three, and this is probably to everybody here, they say the best time to raise capital is when you don't need capital. and kind of be opportunistic about it. So when you have a healthy balance sheet, limited to no debt, and even through a pandemic, when you're growing, and you kind of hit that that level where you don't necessarily need to raise capital, then you become a very exciting target to liaise with in regards to raising some funds.
Yeah, love it. Yeah, that's been a theme I think that we've heard all the investors mentioned tonight, speaking about raise when you're not hungry. If the company is starving when it meets with an investor, it's a lot more difficult to get a deal concluded, right? Sure. Frank, one more question on your side. We just love to understand, because you're in the finance team, and we've got quite a lot of finance professionals and M&A specialists on this call today, as well as entrepreneurs and investors. We'd love to just understand the finance team kind of process and timeline and complexities around a transaction like this. What has been your experience?
First and foremost, everybody here, I will say it's extremely disruptive to any of your other finance goals. Actually, that's why we met Louw, because he helped supplement some of our finance organization during this time. Shout out OCFO. So you have to mentally be prepared as a finance leader for this to be disruptive. Don't overburden your staff, with other goals or OKRs, and effectively communicate upward to kind of non-finance leadership and company leadership that in doing this, you may not get to X, Y, or Z. So I do find it to be very disruptive. Two, there's a lot of granularity in what people who are looking to invest in your company are looking at. So don't only be prepared to provide kind of the high level reports, the due diligence and how they're going to pick into every number and every trend. It almost feels like a game of gotcha in the sense that they'll be looking at a linear trend, and they'll point out a month or a quarter or a metric that may be off, and dive in and pick to that. So I think as you're creating the information that you want to put in front of investors, really vet it internally and challenge yourself, to be very disciplined and say, does this look right? Think like an investor, find, what could be wrong. And that's not a detriment. There's many reasons why your metrics aren't the same quarter over quarter, and why your growth may not be linear or choppy. But the ability to effectively answer that in a concise, knowledgeable way, I think provides people comfort that you're managing the numbers and the numbers aren't managing you. So, those would be my two pieces of advice. One, plan on it being very disruptive. Make sure you're not overburdening your team. And two, really be thoughtful as to what numbers, OKRs you're presenting, and challenge yourself to look at those numbers before they go into an investor pack or into a fundraise share drive. I have a bunch of investors who are, come from the smartest universities and banks around the world, kicking the tires harder than a light tap.
Yep, and that's very well put. And if you put something out there that you haven't thought about that well, it's going to come back at you, right? Just create more work and more complexity. So no, love that. Sam, the actual investor that is looking at you and going through that process with you is also quite an important part of the puzzle. As we've heard, there's a ton of capital coming into the market, new investors, new funds, existing funds raising more money. There's a lot of money doing its rounds around the world at the moment, especially flowing into Africa at the moment too. Sam, thinking about who your ideal investor or investors are, what would you say are the main considerations? What were they for you, and what would you advise to the other entrepreneurs on this call?
Okay, so let's assume that money has a 10 to 15% variance, right? Because I want to make this clear. Having the right amount of money in your bank account is the most important thing to help you enable your business. Now, so if we're just assuming that those things are all the same or similar, I'd say 10 or 15% variance, the super important thing to us is that our investors are our partners. So a strong alignment of value and culture is very, very important to us. I mean, we win together, we fail together. If we have done something wrong, our investors know that we've almost died trying to fix it, right? So we're all on the same team. That's a very, very important thing. And then the other very important thing for us about an investor, which is definite added benefits, is if they can help us get access to the markets that we're looking for. So for example, we're very focused on managed service providers or system integrators, and there's certain VCs that specialize in investing in tech companies that service those sorts of sectors. So if we can work with people like that, that's phenomenal for us. They can make the right sort of calls. Yeah, I think those are the main things. Besides the funding, which is important, values is the most important, and then access to markets.
Yeah, no, I guess, whether it's investors or customers or employees, you're dealing with people at the end of the day, right? So that values alignment is always so critical, even more so if it's a capital partner that's going to actually hold shares in your organization. That's absolutely critical. It's not like you can just, part ways amicably very easily. So yeah, I love that values alignment that you raise as the number one point. I'd love to hear from both of you also while we have a last few minutes, just in terms of, what you think the number one thing is that would make an investor want to invest in an organization. Like, what is that kind of like that big thing that stands out for you guys? Frank, over to you first.
Yeah, I mean, I think just kind of clarity to anybody who's out here, looking to invest. I think it determines what stage that you're in in your organization. So for us, looking at our ARR, I think companies are looking at, what our ARR growth has been and what our ARR growth trajectory looks like. I think that's very important because that's driving a lot of valuation in the SaaS space. And I think too, as you've seen a shift in the market, and again, we're a little bit later stage, being 9 years old or having had a commercial product for 9 years and having raised a recent amount, I think there's also that new feel in the market of they can drive ARR growth. Will they be able to turn profitable? Post IPO or sometime in the future when that becomes important in the valuation. So, I think based on the stage you're in, I think investors are looking at a lot of different things. But I think for our investors, it's that continued ARR growth. And, will there sometime be a way to, to stop cash burn and to have positive EBITDA?
Because stopping cash burn is what makes giant tech companies work so well around the world today, right? Sam, over to you. What are your thoughts?
Yeah, I absolutely agree with Frank. I mean, I think that if we look at the different stages, what they're interested in, if you're a startup or you're looking for seed or any of that sort of funding, they're mostly investing in the people. But then as you sort of get to post Series A, Series B, they're definitely looking for the people and the business model and the ARR growth and the scalability, defensibility, moats, all of that sort of stuff, right? So then it becomes like a proper investor conversation, I would say, post that. And then as you get even bigger, I think it becomes a little bit less about the team and much, much more about the business, right? Because if you're going to do things like potentially IPO or have a mesh sort of strategic exit, the business is the thing that people are going to be buying. Leadership helps, don't get me wrong, but it becomes less and less. I wish that I mattered more, but I've come to realize that the business starts to live without me. It's a very important
Well, that means you're doing your job as an entrepreneur, right? If the company can start functioning without you, that is the ultimate goal, right? To build something that can run even when you are not there to make it work. So no, well done on that. Sam, I wanted to ask you this question really badly. So you're building a global company, but you're doing it from South Africa. Just because we have a lot of people from South Africa on this call, I'd love to kind of just hear your thoughts on that. Like, why choose that in today's time and age?
I wish I had a glamorous answer, but the reason that we're doing it from South Africa is just because we happen to live here right now. And this is the network that we know. So if you're in South Africa, you've got to be able to try and get South African customers. But we are busy. We're setting up a holdco in the Netherlands, and we now have partners in the US and in North America and in South America. But the truth is, if I was born in America, I'd probably started from America. Right? Sure. I mean, it's probably just the real function. But I'm very conscious, especially in the modern sort of online world, and I mean sort of post-lockdown and COVID, it's much easier to get customers anywhere. So we have customers just about everywhere, and COVID has enabled that. Yeah. So I hope that wasn't really a glamorous answer, but it's just practically true.
No, that's perfect. It's a fascinating time to be based on this side of the world. I think from a talent pool perspective, as well as a time zone perspective, and the command of English language, and a couple of different reasons. There's a couple of different reasons why an organization like Impact plants 400 of their people, I guess, in South Africa, and why so many exciting companies are being started and scaled and exited here at the moment. So yeah, funny that quite interesting among the client base. That's really cool.
Extend on that, I think that it's been very easy to deal with other Western English speaking countries, and it's just because South Africans are highly skilled and speak well. So
spot on.
Simple as that.
Thanks, Sam.
And Louw, I was going to say, you kind of took the words right out of my mouth. I feel like that came from maybe our meeting a couple weeks ago or a couple months ago. When we talk about investing in South Africa, you have a very high functioning education system. So great education here, great universities. You're also center of the world. So our center of excellence in South Africa can manage Asia in the morning, the EMEA region in the afternoon, and then support America in the evening. High level of English language, in a relatively young workforce and a young and improving workforce as well. So, you can kind of get people early and let them grow into their roles, especially as a startup or, somewhere where you're still kind of fundraising. So yeah, that's why kind of we look at South Africa.
No, appreciate that, Frank. And Sam, to both of you guys, we're unfortunately out of time for this session. I am still in awe of the two organizations you are building at different stages of building amazing global companies. Thank you for sharing your insights and your war stories with us. It's been really interesting to learn from you, and I'll connect with both of you shortly. Thanks for sharing your details as well. If anyone wants to connect through our platform with you guys as well, we'll send the details right over to make sure they can reach you. Thanks for being so open.
Will do.
Have a good day, everybody. Good evening.
Sam,
Thank
pleasure.
you, Frank. Thank you, Sam. Speak soon.
See you guys later. Bye.
Bye-bye.